What's happening, guys? This week we have a crazy Sunday scan coming at you. Obviously, last week was pretty much the craziest week I've ever had. It was probably the craziest market I've ever seen. I'm on year 18 at this point, and I had my best day ever, my best week ever, and my best month ever. And that is that says a lot, because it's not like I just started trading a year ago or 5 years ago or 10. I've been here literally almost 18 years, and I've never seen anything like that. I was not part of the 99 or 2000 .com boom. I came in shortly after that, around 2003 or so. And was dabbling and trying to figure out, what type of trader I was going to be, and started with OTCs, and then, slowly graduated into NASDAQs. And actually, OTCs are as hot now as they were when I actually first started, when I was, 18 years old. So it's interesting to kind of see this complete 180 and reversal back to similar days when I first started. And I can't imagine knowing what I know now back then. And the cool part about that is a lot of the traders that you see that are young, that are 20, 21, 22, 23, Mason, for example, that I've mentioned a few times on Twitter, as well as a few others that kind of are pretty quiet on Twitter, off of social media. They are amazing traders, and it's because the amount of information that's out there now, you can shorten your learning curve just amazingly. And had that been out there when I was 18, 19, and 20, I mean, it would have been amazing to have that same opportunity when the market was as hot as it is, now. And that's the OTC market. I'm not talking about NASDAQ. NASDAQ, I've never seen anything like this. And peak FOMO that I've ever seen, the most involvement from even non-trader related people. I've probably been contacted the most from friends that I haven't heard from in 10 or 15 years this past week about GameStop and my thoughts and what do you think and this and that, than ever before. And obviously we had that whole Bitcoin movement. We had all these different types of situations that have happened in the past, including, Tesla going nuts and a few other things. But I've never seen a movement of this size, this capacity, as we've seen on GameStop. So it's going to be interesting. And, first and foremost, I'm not short biased. And, just because I take a short trade on GameStop or AMC, it does not mean that I'm a short, right? And, you can see there's this whole new breed of Reddit traders, Robin Hooders, like we call them, because of this exact point that I'm about to make. People just don't understand, right? You think that because somebody shorts something, they're a part of the problem. You think that, you can only go one way. And, what's interesting is, AMC, now I did not hold it, obviously. I was sized in like crazy at 220s. I put the idea on Twitter. I said the key levels were 235, 240s for the breakout. I traded it around the core for, a decent trade, but no, not at all. No, I never, not even close to holding it to 15 or 20 or 25. Not happening. It didn't happen. It's not going to happen. I'm not going to pretend that I held through it or anything like that. But I shorted it a few times, and all of a sudden, you're a short, you're part of the problem, you're squeezed, this and that. And these people, this is what we're up against, right? These individual traders now have no clue. And they don't care that you were long and then you went short and then you might go long again. They don't understand day trading. They think that you can only go one way. And so what does that mean for us? It means that we need to understand what the other side is right now when we're trading, or what is happening right now, the amount of FOMO that's in the market. And if you adapt, and just like we've been talking about for months now, embrace the chase, right? Last week I said that, and probably the last 5, 6, 7 Sunday scans have been talking about long, going long, Just deal with it. Even if you're a short bias trader, don't come to the market not understanding why things are going up. It doesn't make sense. It doesn't matter. It doesn't matter if things make sense because none of it makes sense right now. The only thing that does not make sense is you coming to the market each day, not understanding why things continue to go. You have to adapt. You have to deal with it. And this is the way in which trading is right now. So the sooner that you get comfortable with that, the better you're going to do. The more opportunities are going to be out there. But, there is a lot of uneducated people that have now entered the market even at a multiple higher than when we first started talking about it with Robinhood, right? When COVID first hit and Dave Portnoy with Barstool, brought in a whole bunch of traders into the market. We had record opens, millions and millions of accounts, and just a bunch of uneducated traders. Which, look, they're making money. They're making great money. And the problem is the confirmation bias, right? Confirmation bias, essentially that the price going up means that you're right. And yeah, they're right until they're not. And the difference between a seasoned trader like us and the unseasoned new traders who have no clue is that they only know how to buy, hold, and things go up. That's great. And I'm not bashing anyone that is killing it because like I said in the last video, you only need to get rich once. But the problem is nobody has risk management right now that is a new trader, and nobody really understands exactly what they had until it's gone. And so that's why I recommended, making sure that you take a step back, look at how far you've come, because if you don't, before you know it, it'll be gone. And I'm not saying that's going to happen today, tomorrow, or anything like that. I'm not a bear, but I do know, I've been around 18 years trading the markets, but I do know how it ends. And, you're going to get into a situation where you're kind of over leveraged. You're going to get into a situation where maybe you're too much size, didn't have a exit plan. You get in a halt. You get caught in an offering or bad earnings play, whatever it may be, and you're going to lose half your money. And that's fine. Everybody's got to learn somehow. I lost half my money. I blew up 3, 4, 5 different accounts when I started learning. But the only problem is right now is just this confirmation bias and these new traders that think they're right and think that they know better than somebody else. And we're all students of the market. We'll never master the market. The market's always right. And the sooner that you understand that, and the sooner that you put the process over profits and risk management at the forefront, the better you're going to do. And the longer that you're going to stay. Half of these traders, more than half of these traders won't be here next year. And I think that's very important. And, I think we should get right into the GameStop discussion and all that good stuff. So first and foremost, I was going through picking out winners. And I was like, oh, wow, we got a lot of comments. There's like 200 comments of, a fake IU, person replying with a WhatsApp number and all that kind of stuff. So, we typically try to find and kill all the spam off. But, just so you guys know, one, we're never going to comment back, with a phone number or solicit you in any way. We just do these videos. Occasionally I reply to people with my own handle. But that's the extent of it. Same thing with, Instagram, people DM me 20, 40 times a day with, hey, you got a new impersonation account. Just so you guys know, I only have one account and it's Investors Live. And you can see it's pinned on my Twitter profile. You can see exactly which ones that we own and operate. And anything else, anyone else that contacts you is not us. So, if you don't fall, I find it odd that I have to, suggest that or say that. I don't think that most of you are that stupid, but, there is a couple that are going to fall for it. I know that most of you guys are much smarter than that. We'll never contact you, solicit you, or manage any capital whatsoever at all. So understand that. And so let's get right into this week. So the winners this week, first and foremost, we're going to do Icon Meals next week. So as you guys know, all of these things that I do are not promotions. It's stuff that I believe in, stuff that I use. I've contacted them all and said, hey, let me give away this or that or this or that, and they've agreed. So, it's good for them. It's good for me. And so we're going to be doing that next week. You get a week of food. So this week, like I said, I reached out to Scans and I said, let's give away a month of Scans. It's something that I use. You guys know that I use Dash Trader for my platform, trade ideas for most of the NASDAQ scanning, and then I use Scans. And Scans has been around. It used to be Equity Feed. Scans is an amazing platform for both NASDAQ and OTCs. For those of you guys that are in my room, you see my scans and what I use during the day. There's a lot more. You can customize it to you. But Joseph Thornhill, you got a free month of scans this month, and reach out to me, webmaster at investorsunderground.com, and I will get that going to you. And then also, like I said, all you have to do is comment, leave your biggest or key takeaway from tonight, and you'll get either a in the running for a free t-shirt, free month at IU, or a Momo Trader. So Alex at Be The Story, I'm sending you a shirt. You've been leaving some good comments as well as some amazing videos and interviews you've been doing. And Kenneth Alvis, I'll be sending you a t-shirt as well. Contact me. All right, so like I said, confirmation bias, the biggest problem right now is that people see prices going up and they think that they made a good decision. And that's great. People hold and will continue to hold. They see, take an example like KOSS. It's only $10. It's only $20. It's only $50. And GameStop just went from 30 to 50 to 100 to 300, right? So COS is only 50. So that's what people look at. And as the price goes up, they're doing the right thing. People are killing it, sure. But people are also going to lose half. As you saw, COS squeezed out shorts and then came all the way back in. You have to be cautious of that. The key for me, I'm Perma-unbiased. People, some of the replies today on Twitter, you're a short, you do this, you do that. Like, most of what I've done over the last 6 months is on the long side. Yeah, I prefer to short, and I will put more size on the short side. And there were some amazing short opportunities last week. Between VIR, PETS, PETZ or S, I forget which one it was. We had BBBY, BB, AMC, you name it. I mean, there was just everything that went up came right back down, and it was amazing. So, the key is just to remain perma-unbiased. You don't need to form any strong bias in any one way because it's a trader's market. You could be dead right and it flushes out and then it goes right back. And just because you short it here, doesn't mean you shouldn't cover it here, because you shouldn't be betting that it's going to continue to go down when the range is so big. You're, in my opinion, your goal should be to size and scale in more, taking advantage of the range and not look for the bigger picture, full unwind type of trade. We're not in that market right now. Price convinces new traders that they're right, and they are right for now. And for now is the most important piece of that topic. And I think that a lot of new traders, especially if you're just starting out, if you're one of the Reddit crews, if you're one of the Robinhood crews, all that kind of stuff, no offense to any of you, but just think about what you're writing, what you're responding. Think about if you are responding to somebody that's been doing this for 10, 15, 20 years and 30, 50 years. And, do you really believe what you're typing? And I think that there is, that is part of the problem. I think that right now with GameStop, I think a lot of people actually believe what they are typing right now, what they are talking, to social media and tweeting out and stuff. And I think that that's going to be part of the problem. So as much as it's in us versus them, the little guys versus the hedge funds, yeah, sure, a couple hedge funds blew up. But there's a lot of supply out there. There's a lot of demand, obviously. And who knows? Maybe GameStop gaps up again. Weekends are going to be really good, in my opinion, for GameStop because the boards are going to go crazy over the weekend and, really create that buzz. And like I said, there's been more buzz than Bitcoin, at least in my circle that I've, ever heard before. So I think that, the key here is to understand that all of these companies that had huge short positions are in really bad financial conditions. So they are going to utilize these moves for raising money. A lot of them haven't yet. AMC did, AAL did, but it's their responsibility. It's their fiducial responsibility to do so. Otherwise, if these moves happen and then they go bankrupt, I mean, that's ridiculous. And it's also telling that a lot haven't raised money yet. Maybe they can't raise. Maybe nobody's interested in raising. Who knows? Maybe they want too high of a price. Maybe they get cocky with the high price, but nobody's willing to come up and give them money at the price that they want. So those are all thoughts that I have, but the key is to understand that during times of panic, both to the downside as well as the upside, are the biggest times of liquidity. So although we're looking at these opportunities and we're saying, oh my gosh, look at this, the little guys are taking on the big guys. No, that's not the case. Yeah, maybe there's one outlier, but this is all going to end very badly. And, at the end of the day, the retail is going to end up holding the bag again. It's always a supply and demand. It's basic, economics. And, we all had to take that in class. And at some point, there is going to be more supply than the demand that continually builds. And it's going to catch up. And so you just have to understand that. You just have to trust that that is how it's going to end. Otherwise, you're just going to be one of the many that are going to be taking a tax loss at the end of the year, which is fine. I don't care. I'm just trying to help out the folks that are just kind of joining and figuring this stuff out. So I think the worst part about what happened this week with Robinhood is that it gives folks an excuse, somebody to blame, right? A lot of traders, when they start, they always kind of like blame somebody else. I lost because this happened. I lost because that happened. This guy said this. This guy said that. And, you can always point to like this research report got me out, or this guy said he was long and I lost. And it's always easy to point fingers. But the problem is sometimes you got to kind of look at whether or not it was a reckless trade. And was buying GameStop or AMC at 20 and 25 thinking it's going to go to 100, was that reckless? Yes. Yes, it was. And, I think that what Robinhood did was not right, especially if there was cash in the account. Just like E-Trade, I said, E-Trade is just as bad in that situation where they start to force a 4 or 5 to 6 to 1, whatever, like 200, 300% margin requirements at times, right? So even, let's just say you're short $200,000 worth of stock and you've got 6, 7, 800,000 in the account. Even if you've got another 75% in cash, they'll still stop you out. They don't care, and I don't think that's right. And I don't think what Robinhood did is right. But I think that, you can look at the situation. You kind of know it's a sketchy situation. You kind of know that there's going to be margin requirements and maybe shouldn't be involved in those trades. And I think that it leads to another excuse as to why the trade did not work out. And because of that, people are going to take twice as long to figure out, what they did wrong and the trade at hand. So I really think that, you guys got to focus on where your edge is. And it's not always the leading ones. It's not always going to be AMC or GME. There's going to be a lot of better opportunities elsewhere. So where are your eyes? Right? Are you always zoned in on that one? Just like, whenever we have a 200-300% runner, right? Do you just focus on that one and then you miss all these other stocks that faded or broke out that you were prepared for, but your eyes just went to the one that was all shiny and jumping around, right? And then it uses all your attention, and the opportunity cost that you missed from, over here, is gone. And you missed it, you messed up, and you didn't even nail this one trade that you've been focused on because it just took all your attention. And so that really, I think, is a key takeaway. Where is your focus? Use GME as a guide. Use it like you would use SPY. Usually I have SPY up to kind of get a gauge on what the market's doing. Maybe you'd have gold up on, particular days. Maybe you'd have metals up on a particular day, like, or steel rather, like if you're going to be trading, X or something like that. Maybe you have a couple of those on watch to gauge what the overall sector is doing. And so in my eyes, GME is sort of that FOMO index. Okay, if this thing's going to the highs, then I probably don't want to be short all these other 10 names because everybody's going to know, like, hey, all you got to do is buy, and it just goes up. So I think that that's important. Have GME up there. I took a trade off of AMC right off the open, and it was an immediate $2 per share. And the reason that I took that trade, just like I wrote in the room, GME slammed hard. It was a nice morning ramp, going. Everybody's super excited. All of a sudden, it just slams. AMC was still the same price. So to me, that's an edge. The faster I can react on AMC, based on the FOMO index, GME, the better chance I have at nailing that trade. And it immediately went down $2 into a circuit halt, and it was an amazing opportunity, amazing trade. So it was a good one in IU on Friday. Great way to start the day. As well as, obviously CATB as well as many others. But I think it's important to understand where you are on that index. Where are you on the FOMO index? What cycle has it been easy? And I'm not saying trading is easy, but have the trades been relatively easy? If they are, then a lot of people are going to be on the same side, right? And when it starts to reverse, it's going to be bad. So that's why, you might see me get more short bias at times and then start to get more long bias based on where we are on that sort of FOMO index, what kind of the social media is saying and things like that. So we've got a lot of trickle down effects. For example, KOSS. I left a fortune on there. I'm going to do that every single day. So it's good to say that you left a few, I don't know, maybe 7 lake houses on the table. I don't really know, but cost, for example, I had a ton at $4, and yeah, it hit 170. We can play that game all day long and say how much we left, but what does that do for the other trades, right? So we had GBR after that. We had JAN, we had SIEB. It starts to activate the low float sector, and then even potentially, in the week ahead, EDRY as a low floater shipper that started to go on Friday. So it's very important to understand what could start to trigger other moves, and so that's why I was very quick to JAN and very quick to LLIT as well as others. And normally I'd ignore those, but not in this market. It just depends on what's moving and what people want at this very moment. So same thing, intraday opportunity. You can short all day long if you want, but you're probably going to get exhausted. You're probably going to get blown out. And so I would look back at CATB, TRVG, and SIEB. So we started the morning on SIEB in the room. I was just letting people exhaust out, and newsletters were trying to rip it up and push it to new highs, and they absolutely failed. And stock ended up dropping about 70% off the highs. But the key level, you identify the key levels. 22 was the main support. CATB, you can dabble on the front side if you know what you're doing. Otherwise, you got to wait for it to exhaust out. I posted some thoughts on Twitter. You could see the real-time thoughts. But post-exhaustion, remember, when there's huge range, you don't need to hit the top. Take a little bit, let it fade, let it continue to fade, let it prove that it's going to fail. And when it does that, at least you have dip buyers pop selling, right? You want to wait for dip buyers to become pop sellers. I've said that for the last 10 scans. And that it's a huge piece of trading right now. And if you can do that, you will trade a lot better. I think last but not least, a lot of you guys need to hear this right now, but that next mentality. I went over that in one of the videos a while back. We did it for Traders for a Cause. Look, you're gonna leave houses on the table. You're gonna leave, a couple $100 on the table. Everybody's at a different level, right? And you can have a great trade and then use that excitement to get into the next trade and ignore all risk management, and then you give it all back. For me right now, I probably took on the least amount of risk. I could have done a lot better last week. Absolutely. But my drawdowns compared to my upside was ridiculous. And I barely took a draw on a lot of these names that, I had my best trades ever, my best week ever, and my best month ever, right? My draws were really minimal because I scaled into what I was right and I left it alone if I was wrong. I didn't scale into it. I either moved on or I just kept my starter size until things progressed and set up, and then I scaled in. And, that for me is most important because, yes, I could have made a lot more and I could have taken on a lot more risk. But what if I was on the wrong side of the move? What if I had too much size and I took a 7-figure loss? Would that have screwed up my head and then made me not be able to do what I did the rest of the days, the rest of the month? For me, it's about firing on all cylinders. So, as much as I know people that made 40 million last week, 20 million, 15 million, 5, 10 million, that really happened. But you have to understand that if you're going for that, you've got to be okay with 1 or 2 million of a drawdown. And if you're not okay with that, and if that changes your mentality, if that changes how you're going to come to the market the next day, then it's not worth it. I get getting to the next level. I get trying to be better and bettering yourself. But you have to stay firing on all cylinders, because when you're firing on all cylinders, it will add up faster than you can imagine. I promise you that. And, for me, and look, I said 40, 30, 15. Yeah, that really happened. Yeah, I know people that did that, and a lot of good friends, very, very close to me. But, that could also be $150 for you. It could be $400 for you. It could be $1,000 for you. It doesn't matter. The numbers don't matter. But if $1,000 drawdown is going to screw you up for a couple days or a month, or it gives back a month's of profit, it's not worth taking on that risk. Your time will come. You will understand when it is time how to risk and when to risk. Don't push it. Don't oversize before you're ready, because the key is to stay here long term. And the only reason why traders don't make it is because they blow their accounts. They don't have proper risk management. So the sooner that you understand that, you've got to just continually better yourself, but don't worry about others. That somebody's always going to make more, no matter what. No matter what. Be happy with where you're at. Push yourself correctly, though. Find out what your best A-plus type setup is. Mine may be different than yours, but find out what you're best at and then go from there. And, as that trade sets up, when you say, oh, that's the one, this is my trade, that's where you risk. That's where you put more money, because 90% of the time, maybe you're right. So it's worth that 10% of the time that you're going to be wrong to take that loss. And that is how you scale up. That is how you get to the next level. It's not about, oh man, my buddy made $1 million, so I'm going to go bigger. Crap, I lost $500,000. That's my account. Now I only have $50,000 left. That is going to screw you up for a long time. So stay in your lane. When I said that this weekend, means, stay focused. Get inspired. But if you start making decisions based off other people, you're never going to be happy. Look at all the miserable people out there. Okay? And, it's a never-ending chase. if that's what you let it be. So make sure that you better your process every single time, and the rest will take care of itself. Let's get into Sunday Scan. All right, guys, so we're going to go through basically about a dozen names that I'm going to be watching. There's a lot more on the list just to stay familiar with. For those of you guys that this is your first time watching, typically I have my main watches, which usually consist of like 2 or 3 names, maybe 4. Then I have failed follow-through momentum, which is typically trades that I'm looking to continually fade if they stay heavy 9:45, 10 a.m. plus. I have the continuation section, which is more of like bigger picture type of ideas where looking for maybe some continuation in the daily chart, a lot of my swings, things like that. And then I have staying familiar. Staying familiar section is essentially, names that I want to see the chart. There's a lot of, I actually added a section this time for potential unwinds as well, which are, a lot of big charts that have basically squeezed out, and it feels like the name is kind of run its course, and potential downside in the near term. So as always, as you guys know, I'm doing this for informational and educational purposes only. So none of these are buy or sell recommendations. We always put the disclaimer below, and that's important because if this is your first time trading, you have no idea what you're doing. We're talking about highly volatile stocks, and you could either double your money or lose half your money in a moment. So be safe out there and use this for educational purposes. The idea is to kind of share with you where my head's at and how I prepare each and every single day, and what would cause me to take a particular trade. So as you guys know, there's a lot of services out there that will tell you what to buy or sell, but that's not what we're about. We're seasoned traders, veteran traders at Investors Underground, and we've got a lot of great talent there. But this is about you becoming a trader, not a follower, and this is about the long game. This isn't about signing up because you saw a big P&L and maybe you can buy a Lamborghini. That's not what we're about. And we're all here for the marathon, not the sprint. And I hope that you're feeling the same. So GME, like I said, I'm not excited about trading this. There's nothing that is it's just hard. It's a hard name. I traded this short, and I had a great unwind, and we went circuit halt down. And if you got caught on the long side, you could not do anything. You could say, "Oh yeah, I have a stop at X price." It wouldn't have triggered. You would have got stuck. So don't pretend for a moment that a stop is going to help you. When you get stuck in a circuit halt, there's just nothing really that you can do, and it sucks. So for me, I've traded GameStop probably about 3 or 4 times last week, I would say. But it hasn't been a main focus for me. What has been is, how it reacts. I've been getting up at 4 a.m. every single day, which is, a little nutty, sure. But this right here, right off open, we've got that morning rip and slam. That, to me, is where my edge is. Not on GameStop, but on the AMC trade that I took. And that's where I short. Right at the top, right when I alerted in the room, and it immediately went downside into $2 per share. The reason I took that trade is because I was watching GameStop, not to trade GameStop, but to use it as that FOMO, fear, greed index that I was talking about. So that's how I use GME. I'd rather watch it than trade it, and I will continue to do so. And hopefully we have more gap ups, more 4 a.m., $400 type moves. Who knows? Weekends are a great time for situations like this because, you rally the troops and everybody's holding. And it's really a game of numbers, right? It's all supply and demand like we talked about. At some point, supply will win. But if they continue to, corner the float and this continues to work, then, yeah, we've got a potential, crazy situation unfolding. But the better GameStop does, the more opportunities we're going to have. and that's going to be on AMC, as well as BBBY, PLTR, SPCE. All these high short interest names have all benefited from GameStop. So that's how I'm going to be using that. And AMC, same deal. You can see what I would suggest is to kind of draw out these lines just in case you can't see them. And anytime you have these kind of outlier moves where they break over the prior, little resistance spots, or when they break down and they go to the prior support stop, take note. Because even if you traded AMC a couple days ago, you'll notice that if you were paying attention on that flush out, it went right under the prior base, and it went right to that spot, got out a bunch of people, and came right back up. And if you're using these levels, it's going to help you. And you can see this higher lows over here, 850 starting to base, and then it continued to go up. And the simpler you make it in situations like this, the less emotional attachment or involvement you're going to have, and the better you're going to be able to trade this tape. So be cautious out there, obviously, but take note of the levels that are having issues or that are acting as support, and I think that you'll find that you're going to be able to make a lot better trades. CATB was a beautiful one. The goal in the room was watch for a trap, right? Watch for a trap after open. I actually participated on the PR. I got some great fills over here and sold into the ramp. So I had a nice padding to start. But my goal was to buy dips, and if 350 started to firm up at 9:45 to 10 a.m. is what the plan, and you guys saw it on Twitter, the time stamps, and it wasn't something after the fact. It was ahead of time. And what I saw was basically this 350 sort of base coming along. And what we've become accustomed to is these traps under VWAP and then the go, right? So a lot of times you see them ramp up, fade, get shorts in, under VWAP, and then all of a sudden they reclaim. You've got shorts trapped. And that's exactly what happened. It continued to go. So you can see the 350 became the base and came back under, retested, and right on cue, 10 a.m. launch. And so we had a huge move. And, you can also check on Twitter the timing and stuff. But I was waiting for that exhaustion move. You don't need to find the top. You can wait. It's better to be 50 cents late than $1, $2, $3 too early. When you have range like this, you're not going to miss the trade. I promise you will not miss the trade if you wait. It's better to be upset that you didn't get the top even though you knew it was the top than to think you had the top and be $3 too early. And that was the case for a lot of people. They emotionally squeezed out everybody without risk management and then completely unwound the trade, and I got a good piece of that. I left early. I left another buck on the table. It is what it is. That is what's going to happen every single day in these markets. So, PHUN, another one. So anyway, with CATB, higher the better. Typically what I look for, ideally comes back up to prior resistance spots. We'll see. But ideally it gaps up 450s, then fades off again. If not, then I'll probably leave it alone. Last but not least, for the main watches, PHUN, another one. No business here, but this is the new way. So, you got to adapt to it. You can see that there's a little bit of resistance, 310s, 305s. Let's just call it, we'll widen it, 310s. And you can see that there's a base at 270s. So you should assume that it's going to continue to squeeze if it's over 270s. You should assume that it might unwind if it's under 270s. You should assume that shorts are bent if it's over 310, and be cautious. Let it go. Let it do its thing. Maybe it goes 320, 354. We don't know. We don't know how it's going to open up. But if it does open up at 350s and it stays heavy, I'm going to assume that 310 is the spot versus the highs to risk off of. So that's how I would trade that. If it were to gap up 350, 340s at 4 a.m. and it starts to have trouble at 310s, now I have something to risk off of. If it opens below 270s, bases 250s, starts to reclaim 270s, then I'm going to assume maybe they might want to squeeze it. So be cautious, be aware. This should be a good trade come Monday. NAKD, higher the better. It's been a phenomenal trade the last 2 days. I mean, this is another one where peak FOMO, you can always look left like we talked about, and you can see just how key looking left was 3 times, right? And, you can go back, I'm sure you can go back to, prior levels and all that good stuff. But in the recent breakout, 340s is really all you needed to know. And, we continue to have these opportunities every single day. And the key is that you don't step in front with too much size, and don't underestimate how long they can actually hang around for. So, as you saw, it flushed out and then it came all the way back up at the open. But if you use the pre-market resistance, pre-market levels as sort of a guide, yeah, you had a very nice trade. So we had a great trade in the room. Same thing over here. You can put the next level right over here. Once again, did the same thing. Blew through it, came right back under it. So higher the better, and ideally we get some type of maybe $1.90, $2 push, and then maybe a backside move. So there's a lot of traders in this name. It's trading billions. So the key is just to let it do its thing until it starts to fade off, and then that's when I'm interested. BB, I'm gonna fly through these ones because if GME opens up 50, 80, 100 points higher tomorrow, then these will all gap up. And the way that I would look is I'm going to look basically left at different key levels, and kind of find out, okay, well, if it reacts with GME and it gaps up, what are the levels that I'm going to be interested to see fail in order to get involved on the short side? Or, at what point would I like to get long if they start to base? So, the key is I want to see prior resistance fail if I want to get short. I want to see it base and grind up if I want to get long. So, again, I'm not making calls for long or shorts because we're not in that market. We're in a market that we need to understand which ones fit our personality the best. So that's why out of all the stocks out there, I've pretty much brought it down to AMC, BB, BBBY, PLTR, SPCE. That's 5. And that is what I use the GME index for my own trades. BBBY, same deal. And, it's a little bit friendly of a trader, but not BBBY. But, overnight risk, trading these things overnight, there's zero reason to have overnight positions right now on the short side. Zero. You missed out on some opportunities, but you also missed out on, disaster in the prior days. So, sticking with the thought process of your eyes on these names only and missing out on opportunity, right? So we've got TMDI, that was a big trader, TRXC. People start to take these off watch. The squeeze happened. So now I want to watch those while nobody else is. And, as you'll see that, the supply will trickle out and they'll continue to potentially fade. So I wrote the game plans there, higher the better, and then potential, unwinds. But, we have a lot of these types of trades that people forget about. We had TRVG, which was intraday, very similar to CATV. Offered a fantastic opportunity this day. They do an intraday squeeze, comes right back, stays heavy, unwinds. And then the next day, guess what? Look left, and it came right back to the same levels. So a lot of people take these off of watch, TRXC included, as well as TMDI. And, we were watching them, and then something more shiny comes, around, and we forget about them. And there was a nice low risk, high reward, low, stress trade. And so keep those in mind always. Long side, EDRY, I'm watching. These are always potential. The float's so low. There was a little bit of a buyer in there. And just like Haas, it had a weak open, then it ramped back up after hours. So it'll be interesting to see if this takes on, 11, 12. If it does, maybe it goes to 20. It's got a low and a float that it definitely could. So I want to watch that one. I positioned into dips and because I like the dollar risk versus the potential of, maybe 5, 10, 20 upside. And if I'm wrong, I'm happy to be wrong. But I saw it early on swipes, and I'm not really looking for just to flip it for $2. I'd rather either I'm going to be wrong or I'm going to be really right, and that's fine. But because SINO had some big moves, as well as a lot of the other shippers, shippers are kind of getting hot again. So if shippers do get hot and stay hot, then they're going to start to buy everything, and I just want to be early with that idea. And if I'm wrong, then I'll be wrong. DTEA, this is a great breakout chart. I think I bought, I've got a small position, but I'm going to be looking for dips to see if 320 start to firm up. And if they do, I'll continue to put on that position. PUBM, those of you guys that have been watching this Sunday scan for a while, I think that this was Sunday scan day. And as I said, I had position 24 for long term. I was not thinking about 1 week or 1 month, but rather 6 to 12 months. So I just wanted to make a note that hit a 52-week high on Friday. So far so good. So that was an idea at $24 per share, and it hit about 42 on Friday. The other one I'm watching, MOSY. I don't have a position on this, but you can see the topics that we talk about, the big swipe, the big volume day, and now we just have to watch to see if this starts to base, and if so, that's what's been working in this market. So I've got a lot of other stocks that I want to watch. We've got TKAT, we've got Works. There's a lot of great trades setting up, but they're just lower volume and not really intraday trades. So I've traded a lot of swing trades on the long side, and it's been powerful. I have the least amount of positions that I've had in probably 6 months, just because things are getting super sketchy, and I wanted to make sure that my brakes were on. So I want to be prepared when trades come, but we'll see what happens. So anyway, that's the game plan for this week ahead. We've got plenty of opportunities. Stay safe out there. They're not all going to do the same thing. Just like you saw SIEB posted the 22 level in the room. Phenomenal unwind throughout the day. So be cautious. There is a lot of funny money out there. There's a lot of people getting very, very rich. Yes, they will lose a lot of it, and it's going to happen fast. However, as traders that have been doing this for a long time, you have to recognize that the game has changed a little bit, and that people are holding, and that people are, not afraid of dips and pullbacks and buying at 50, 70, 80. None of that matters. All that matters is the price, the action, the trend, and that's it. So stop coming to the market not understanding how or why. Just like I said the prior weeks, deal with it. Understand it, adapt, and the sooner that you can do that, I think that you're going to be in a much better position to be prepared for this market and to, pull money out of it. So be safe out there. It's a new month. Obviously the Friday ended January for trading days. For most of the people that I talked to was, their best month ever. And that's great. And if that wasn't you, don't be discouraged. The encouraging part is that this market is the most incredible market to build accounts. Where if you get involved in momentum stocks that have good risk reward, the reward is so high versus the risk right now that you can compound gains rather quickly. And I would make sure that you understand that when I say that, I'm talking about a good daily chart, ABCD type setup, multiple time frame breakout. I'm not talking about a stock that went from 30 to 300 and buying a dip. I'm not talking about a stock that, doubled and, should you buy the breakout, things like that. I'm not talking about that at all. I'm talking about, normal stocks that are coming off of a base that maybe your risk is 10 or 20 cents. And in this market, upside could be $1 or $2. That's like, 10, 20 to 1, or, even if it's, only 8 or 6 to 1. Typically, I look for 2 to 3 to 1, mostly 3 to 1. 3 reward for 10 risk, 10 cent risk, 30-cent return, right? So as long as that is the risk reward that I see, then I'm comfortable taking the trade. But anyway, that's it for me. I'm going to try to do an early video next week because it's obviously the Super Bowl, and I'd rather have people get prepared a little bit early, maybe. So keep that in mind. I don't know if I'll shoot it out on Saturday or Sunday. I'd probably do it Sunday if I did, but it'd be earlier than obviously 6 p.m. or something like that. So anyway, if you guys have any questions about Investors Underground, reach out. And I hope to see you guys in the room. It's been a phenomenal year so far, coming off of 2020. And that's it. Thanks for watching. Make sure you guys like the video and leave your key takeaway. And as you guys know, we're giving Icon meals away next week. We're giving t-shirts away, Momo Trader's book. We just give a bunch of stuff away for everybody that watches. All right. Thanks.